Okay, so today is 4/24/2024, and we're talking about technical analysis, indicators, trends, and some stocks. So what is significant about this particular pattern on the weekly, and we still have 2 more days to go, is that we are retesting this closing high right here. So we are right up against it now. We're actually higher than this close was 15.4. We're so far today, well, the market is closed. We closed at 15.5. We got 2 more days to go. If we start to break through this marker, we're going to, and with good news, we're probably going to get a really nice gain on the money coming up. So you already own it still, yes?
Uh, yeah, this is what kind of company is this again?
This is the weed company, although it's not a marijuana company. This is that Chinese company like Temu that does a lot of digital e-commerce. You own it because you already sold it once. I
Yeah,
think you
I have
bought
a
back
little
some.
bit. Yeah, it's not it's just something.
Okay. Um, but if you have the extra money, again, this is it is riskier, but the payoff clearly has been great for those that bought down in here and the run, those that bought down here again and the run. We're talking 10 times your money,
Mhm.
from in these runs. So technically we look pretty good. So the other one, I know you own SPZI, has been making its way higher. It looks beautiful. It ran up. We did about a 50% pullback. Um, I would imagine you still own this stock. We did about a 50% pullback. We bottomed in here. This is where support was. Hit it, hit it, hit it, hit it. And then we started working our way back up. We were in a bit of a downtrend in here, as you can see, right?
Mhm.
Following along. And then we broke through this downtrend last week, and we have been going higher ever since. So another significant sort of marker. This is the highest close we have had right there, similar to the other stock, IGPK. This closed at 9.6 weeks and weeks and weeks ago. We are at 9.9 on the close. So when stocks break out of their resistance areas, they tend to go higher, and this will go higher once it breaks. Very, very nice trading here with um, the three very nice green candles that are long. Shows that the bulls are firmly in control, people who are buying, and we're going to get a break, and it's probably going to see at least I'm sure it'll push eventually 2 cents. So it's going to be a double from here at least. And with what they're doing, the stock's going to trade a lot higher. So it'd be one again. I told you weeks and weeks ago that I would hold these two stocks, especially
Okay.
this is the chicken paw one with
Yes, that's yeah.
the known entity. We know what they've been doing, a good play here. So two solid ones in the OTC. We do know the OTC is more aggressive and can be manipulated, but the rewards can be far greater and the losses can be far greater. So as
Yeah.
long as you've got a good one, you should be okay. Couple of stocks to highlight quickly. Agba, I think I sent you a message. Don't know. Let me see. I think I sent a number of you guys a message. Let's see here. You may not have seen it, but no,
I didn't get anything.
no, I sent you the message on NIVF.
Oh, I didn't know what that was. I didn't know what you meant when you said that. Okay.
I would say it looks good here at 131. I liked it at $1.31.
Oh, okay.
Agba, it was a merger, and we'll look at the daily. Um,
What
it's
kind of company is that one?
Ag,
Ag, uh,
Clear drawing set. Agba is what do they do? They I don't even know what the heck they are. I think they're in finance. Yeah, they're in finance.
Oh,
I'm pretty sure. Yeah, they're
okay.
a Japanese company in finance. They're merging with Triller. The
Oh,
proposed offering. Triller is like a TikTok, if you will. So the
okay.
merger values it at 4 billion, which put it really undervalued based on how it was currently being valued. And you can see that it was in a bit of a channel here. And then when the news came out, of course, it really didn't have any volume for forever. The stock went from 40 cents to over $3 in
Wow.
4 days. So 7 times your money in 4 days.
Wow. Yeah, I see
Um,
that.
that's a nice gain. So it's pulled back some.
Mhm.
The uptrend is a bit like that. And so this is today, tomorrow, if the stock spins on down here about 220, I may look to rebuy. I got some nice gains. I didn't get all of this gain here, but did certainly make money on the opportunity.
Okay.
Um, let's see here. NIVF, I sent you a message saying I liked it at $1.31, maybe.
Oh, it's like 2.5.
So yeah, this was on Monday. I sent you the message, and I know you can't always respond to things, or I don't know if you'll see them, but at times I'll send something out thinking maybe you might have some money you want to spend, you might be looking to do something. So I'm like, hey, I like it at $1.31, which was right.
I'm
You know,
gonna be honest, when you sent the text message, it was like 9:30 and I didn't even understand what you were saying. I didn't understand the acronym. I didn't understand what you like. For some reason I thought it was something you meant to send to someone else. So I couldn't understand what you were actually saying.
no worries. If you see a stock
So maybe
symbol,
that's what I need to start like paying attention to that.
right. If you see 4 letters or 3 letters,
Just look it up, Sharonda.
right, look it up.
I didn't realize that. So I'm
Yeah,
sorry.
and if you don't know, check. Just say, hey, Eugene, were you sending? I'm like, yeah, I'm sending you this message. I like this stock right here in case you want to buy it.
Oh, gotcha.
Yeah,
Gotcha.
so good money was made. Here's 132. I told you about it at 131. It went to 295 the day
Yeah.
later. Again, my goal is to teach you, and then along the way, like I said before we started this whole process, is ideally to help you make money.
Mhm.
And so when I throw something out there, I'll usually put a price point to it. And going forward, it is for you.
Thank you. I appreciate
It
that.
is for you. So we want to help
Yeah.
you make money along the way.
And unfortunately at 9:30, I'm in meetings at 9:30 in the morning. So probably the day just got away too.
That's all right. So
But it's good to know. So
just
I'll
take your
look at.
phone out like this in front of everybody, and they'll say, "What are you doing? Hold
Oh,
on.
I'm texting a client.
You're
Thank
trying to
you.
make money. I ain't got time for all this meeting
They don't
stuff."
need to know that.
That's right. Or say, "Excuse me, I got to run to the restroom."
All right.
Okay, so and I'll try to keep that in mind.
No, that was like my first time getting a message like that. So I'll just like now
Mhm.
I understand like your way of communicating. That's
Okay,
it's just
no worries. We got it. So you when you see
yeah,
it come through, know that
I'm just gonna look it up.
I might say I like it at 131. If it goes any lower, I would be a buyer. Again, wade in the water. That's
Yeah.
all language for, hey, if you have whatever you have, $1,000, that might be 300, 300,
Yeah.
400. That doesn't mean put it all in at one time in case it pulls
No,
back.
no, absolutely not.
So anyway, nice gain, more than a double in a day. And I own a bunch of it on this pullback. And we can see, because I already sold it again, but sold it twice. It ran up, bought it again, ran up. And then now we're in this pullback. We're in this downtrend, right?
Hmm.
We can see it. And this is a 15-minute chart. And you can also see that, After hours is almost over, time and sales, and in after hours, we're kind of holding this bottom that we've been doing almost all of after hours. After hours started right here, and it really hasn't gone past $1.47.
Okay.
Putting that in there.
So
So
what was happening when it was going up? I mean, is there something?
what was happening is that they're also involved in a proposed acquisition. They're looking to buy a holdings company called European Wellness Group, et cetera, et cetera. They've got about $323 million in revenue, the European Wellness Group. And so this company, I think it's a Japanese company, is going to give their shareholders, I believe the figure is $268 million. They're going to issue them almost 54 million shares at $5 a share. And then they also are going to have to raise $30 million through trading in the market, through investors. So combining those two numbers to kind of make this other company whole, just about, because they produce about $323 million in revenue. So the acquisition is supposed to close. It was a non-binding agreement, but if they check the boxes, the acquisition is supposed to close, I think, the beginning of June. But because of the $5 price point and what they're valuing the combined company at, and what they're giving to the shareholders of this other company that's I think it's privately held. The other company is going to be a subsidiary of this company, but you got to compensate those other people. So if you're valuing it at $5 a share and you're at 77 cents down here, well, you need to raise that price. This thing's going to come up. And so given however many shares that are out there, the market makers and the retail investors and everybody else, they bidded the price up because they believe eventually this thing's going to be worth closer to $5. So hence the rise in the share price.
Gotcha.
The news
Gotcha.
So right now with the rise, we've got this consolidation, a pullback. You can't go from roughly 75 cents to 2.95, which is whatever that is, for 3.5, almost 4 times your money, without having profit taking. And so without a correction. So this run up 2 days, pull back a day, and I like it. Started coming back in because right in here, because I believe support is right in here.
Okay.
This area in here was in a channel for a good bit of the trading, but a lot of this was after hours. Because remember, and this will be a lot to learn, but you'll get it. It's time and sales. Think about when the trading is happening. So if we could hover over there, you see the volume is next to nothing because it's after hours. It's after hours in here. And then this is pre-market, 4:45 in the morning. And then here comes 7 o'clock when you could have started to trade it. So this time frame in here has to be taken with a bit of a grain of salt. But you can also look over here to see where a lot of buying was. And a lot of buying was in this range here, still. Same range that we were in here. So if you figure a lot of people bought, they may not have got this initial run up, but a lot of people were buying in here, say 130 to about 150. If they have not sold, which they should have sold when we went up here, but for some strange reason, if they didn't sell, you're going to really have an absence of sellers. Like, because if you bought it here, well, why would you be selling now? You should have sold up here already. So now when we come back down here and you're break even, you're going to start to find more buyers, because buyers are going to remember what happened when they were in here. Eventually it broke out, or eventually it went higher into here. At least they made, 20% on their money if they bought it about 150. So eventually you're going to run out of sellers. And if the market makers are artificially bringing the price down to collect shares, you need to be aware of that. Keep thinking of the moving pieces of what is going on, like you're playing chess. So down in here, you're like, yeah, it's probably getting close to really a good buying opportunity. Because the merger goes through and it's kind of worth $5 a share, and we're down in here in the weeds at $1.40 and some change. It's a decent proposition. I think we won't have much more to the downside. So I'll keep collecting shares, and when I get the turn here, you know, you look at this downtrend, when we start to turn here, stock will probably start to run, and then it'll run into probably some resistance somewhere in here. You know,
Yeah.
we have this this area of a consolidation here, all through here. A lot of people bought in here. So this will probably, where it was support, right? Support,
Uh-huh.
support, went up, hit its head, support will probably be resistance in here. So if I buy a bunch at $1.40, we run up and start to run into some resistance around 2. It's a 60-cent gain. That's almost 50% of my money.
Wow.
And so you just keep
Okay.
thinking of it like the ebbs and the flow, support, resistance, downtrend, uptrends, channels, range bound, you know, the story, common sense, business, start to figure it out, you know. And all of this, what I'm talking about, I know you understand every single last word. It's just getting your mind to think that way normally. And
Yeah.
you do that on the daily with your business,
Yes,
with
I
healthcare
do. I
and
do.
wellness. You do every single day, you do the same thing, numbers, sales, occupancy, the law.
Yes.
You're always processing. It's the same thing, Sharonda, the
But
same.
even when I think about like, okay, if I sell this versus this, I'm always looking at what the difference is. You know what I mean? Because if I sell something like a semi-private, I make less. But if I sell the 2 bedroom, 2 bath, it's more revenue. So it's, we have to look at charts and trends all day. So
You're doing the same thing. It's just, it's
a
just,
different product.
yeah, it's just a really a different product. And you're probably not looking at candlestick charts, but you're looking at some sort of charting that's telling you something about
Yeah.
whatever the opportunity is. And you're weighing the pros and the cons and da. It's the same thing. You
Yeah.
just have to just learn this particular product. You're like, oh, I understand what we're doing.
Mhm.
And so that's all we're doing. And so when we get into, let me see
So
if
where did you purchase at? You said it was because you looked at
oh
it
yeah,
at
I've already purchased and sold
131.
probably 4 or 5 times, but now I'm rebuying, and my
Right.
average is probably $1.60 something at the moment.
Okay.
And I'll wait till tomorrow.
To see
I
what
think, look, I
happens.
think they're out of shares. You see these ones,
Yeah.
right? No one's buying one share, right? The commission on that, right? I'm glad you saw that. The commission on buying something is like $6. So if you bought one share, it'd be $1.47. So what are you gonna be negative? Right? No one's buying
Right.
one share. It's
Right.
market maker codes to each other, like, hey, I might be out of shares. And
Okay.
they have codes where they're trying to communicate with each other. So if they need shares or they need something to happen to be able to make a market, they try to
Yeah.
help each other out. So you saw all those ones. Like no one's, you know,
Yeah.
if it was an errant one, like you had an order for 700 shares, but someone was only selling 699. So that 699 went through, and then eventually the one went through.
Yes.
We get that, but you don't have that 1 1 1 1 1 1 like you saw about 5 of them in a row. They're probably out of shares. So tomorrow, I bet you, um, if they try to take it down at all, it'll be met with a lot of buying tomorrow.
It'll be met with a lot of what?
Buying.
Fine. Oh, okay.
Yeah, I don't think the stock will come down much more. It could, you know, where would we see a lot of, I mean, because we really don't have a whole lot to go on, because what was the volume here? Let's see here. That was a 329,000, 520, 237, you know, but then you have this millions and millions of shares that were sold here. So whatever people did here, you know, I'm telling you, they should be out of it. If this is early April, if you were buying in here, if you didn't sell here, you're just not smart. You know, not taking 3 times
Mhm.
your money is not smart unless you know and
Something
believe this thing
else.
is going to $5 or something. You're like, whatever, I'm just going to hold for the pullback. I'll pull back, I'm holding, it's going higher. Um, so, you know, looking at this thing, it hasn't been trading that long. It's only been trading for 4 weeks. because you can see where we stop. I'm looking at a weekly chart. So this week they did like 4 million. This is probably when they started trading. I don't know if it was an initial public offering or what. And then we came on down to the low of 64 cents. We gapped this week with the news, and we ran all the way up where we were up around here. But then you can see, because the chart, the candlestick is telling you the length to which the high was, and it shows you where we're currently at 155, and below that a little bit in after hours. So you can just visually see the distance here has been greater than a 50% pullback, because 50% is about right there. So I already know that we've had about a 70% retracement, which I like when you start to pull back a good bit. So the trend is still up. You get the pullback, and then you try to enter it in the right spaces because you believe, say, the following week that will continue higher. So it's all about getting in at the right price points and getting out the right price.
Getting out for profit.
Yes. So let's take a look. Let me move something over to this other screen so I can see it. And we're going to actually we'll go to bar chart for a second. Let's do that. Do some candles. Okay. Can you see my screen, bar chart?
Yes.
Okay. So I have it on the screen over here, so I'll be looking this way. Okay, so we'll go over some of the patterns. So you know Doji, right?
Yes.
So let's take a look again. We know what it looks like. It's where the stock opened and closed about pretty much at the same price point. So if we look at NIO, which is an EV company in Asia, it's showing you the Doji, right? Maybe. Right there. So it showed, and of course, we're looking at it on a bar chart. So you have bar charts, line charts, and you have candlestick charts. Bar charts, you can see, let me see if I can make that the open here was to the left, this tick here.
Okay.
So can't decipher their little numbers, but because it's a little tight in there. The low obviously is here. Can you see this clearly?
I can see it. Okay.
Okay. The high obviously was here, and the
Yes.
close was here, just like a candlestick chart in this case. So with a line chart, it won't give you that kind of information, but you see the patterns and the shape, the downtrend obviously is here, down to there. But candlestick charting gives you a different look. You can tell whether something closed up green or down red. I can look at something and see that this pattern was a bearish engulfing, engulfed all of this previous day. And knowing what some of these things mean, either they're bullish for the stock or bearish, helps us trade. So we'll go back to, if you go to investing on bar chart, you can go to candlestick patterns, and you can continue to bone up on it. So we know what Doji means. Doji yesterday, obviously, is yesterday. Doji near Doji says one candle where the opening and closing prices for today are nearly the same. So a Doji and a near Doji. So it was almost a Doji. And bullish engulfing,
I know what that is.
And where, Sharonda, do we wish to primarily see bullish engulfings, at the top or the bottom?
I think when the stock rises at the top
We,
and then it starts to take all of the profit, is that kind of what the
nope.
mindset?
Here's what I'm gonna show you. Bullish engulfing. It says, let's go back to it so you can read it. I'm just, throwing curveballs at you. Bullish engulfing. So this signal is a strong reversal signal when it appears at the bottom. So if a stock's in a downtrend, like, right, well, you can't see my chart over here, but if a stock's in a downtrend and you have a bullish engulfing at the bottom, so if something was going down, but now you're having something that's engulfing the previous day, that is a very
Oh,
positive sign that the trend is going to change from the bottom.
okay,
So we want to see bullish engulfings at the bottom because they're more reliable. So
okay.
again, when we look at it's a stronger signal. So when we look at the
Oh,
definition, this signal is a strong reversal signal when it appears at the bottom of a downtrend.
okay,
The rest of that. So same thing, the opposite, bearish engulfing, strong reversal signal when it appears at the top. So keep those in mind. I want you to get those in your
so I
brain.
have to learn these definitions of each one.
Yeah, when you learn just a few
Kind of
of them,
understand.
bullish, bearish engulfing, you got that's easy. Dojis, you got hammer. We'll introduce a new one because you know what the other ones mean. You just got to know when when it's a stronger signal. Hammer occurs in a downtrend and it's considered bullish. So it literally looks like a hammer. So we'll take a look at one of those. So in a downtrend, let's take a look at whatever, CNTA. We'll do a candlestick chart, full chart. You see the hammer?
Oh, okay,
So it looks like a hammer or a pickaxe almost.
okay.
So you think about, what is this telling you looking at this? This is telling you that, hey, this stock went all the way down to here. Guess where it closed the day? All the way back towards the top. So it's telling you, hey, we were down here touching it, but boy, the bulls came storming back in and almost closed at the very top of the range for the day. That is very bullish. So when you look again at the definition and you think about the pattern, I can get to it here. Click. One more click. So hammer occurs in a downtrend, when it occurs in a downtrend, and are considered bullish signals. Hammers
Okay.
occur in a downtrend, bullish signals. And just think about it. Yeah, we were way down here and we're way up here. The
Right.
top mallet part of that hammer, that is,
Yeah.
especially it's in a downtrend. It rejected the bottom of this downtrend. It didn't want to go down anymore. And it came storming back all the way towards the top.
Okay.
Yeah. So an inverted hammer upside down says a red or a green candlestick found at the bottom of a trend. But this inverted hammer thing, it doesn't really say about a strong signal. So I don't even think too much about that one. Hanging man, great name. This signal occurs in an uptrend and is considered bearish. Hanging man in an uptrend is considered bearish. Let's take a look at what a hanging man looks like. Let me get one with some volume. Ericsson, I don't know how they're still in business. Cell
Who
phone.
was that?
Ericsson, the cell phone from a long time ago.
Oh, they still, wow.
Right. Um, There's your hanging man. Okay. Did we say that was bearish or bullish? We said that was, let me go look. So you see the hanging man, right?
Yeah.
Very similar to a hammer.
Yes.
Yeah, not a whole lot of stock I can take on that one. Let me just see what it says though. Hanging man. The signal occurs in an hanging man. The signal occurs in an uptrend and is considered bearish considered a bearish pattern. So I get that. So, you know, you were in it. Let's take a look at it. You were in an uptrend, and then you started to break it. Which one are we looking at? Ericsson. Candlestick. You were in this nice uptrend 5 days in a row, and then you started to
Right.
kind of break it. It's more of like a little pullback. I don't know how bearish it really is. You're still in the uptrend. You kind of,
Right.
and you not only did you come off this 520, you came off the 520 closer towards the top. Some, I don't follow that one all that much either. I try to get the ones that are kind of the main ones that are cut and dry with what I'm looking at or what I'm thinking about. And I don't have to be really looking at all of the patterns. I may really like just a few key patterns. And so we won't go through the rest of them, but let me see if there's one that's really dark cloud cover bearish reversal pattern occurs during an uptrend. Bullish. Let's take a look at a bullish 20-minute decision trend reversal is possible. Signal potential bottom in the market. That's probably a good one. Morningstar potential bottom in the market. Let's take a look at this first one, Biogen, biotech company, potential bottom in the market. Let's see if it shows us anything. Yeah, I don't know that I'm in love with this either. If I look at this, I'm just thinking we had a candle that gapped up and it had a 50% pullback for the day. Bottom in the market, I don't know if they're trying to point at this one, because this is a bullish engulfing. Like this engulfs all of this. I don't know. Some of these names and some of these, because usually this is the one we should be talking about because it's the last one. Yeah, I can see that it's a bottom in the market. It gapped up and it also broke the downtrend. That doesn't really do anything for me. I'm trying to look for. I mean, that's pretty obvious that, like, that this was in a downtrend, and you can
Yes.
clearly see that it broke, and you had good volume. Like, just so anyway, look at some
Yeah.
of these patterns and
Okay.
maybe figure out which one or two or three that when you're looking to evaluate technically a stock and you're looking at candlestick patterns, you need just to be able to recognize, a few of these, but more importantly, just look at it and just kind of know what's going on just by looking at it. Like, you can see what's going on, but the quicker you kind of identify like the hammer at the bottom, you're like, oh yeah, I see how that would be bullish because it rejected the bottom and closed near the top. I see how a bullish engulfing at the bottom of a downtrend and engulfs all of the previous day, how that would indicate a reversal. I see how a doji at the bottom might indicate we're not quite sure we want to go down anymore, or at the top, we're not quite sure we want to go up anymore, where there's this fight. It's just opening and closing right where it opened and closed right where some of those things.
Yeah.
There's one that's called like a three kicker or something. Let me see here. I want to see one more. Radical bullish, two candle signals. Let me see, bullish kicker. I think that's the one. Let's see here. Last one on this
These are
one.
some interesting names.
Right? Bullish kicker. Well, that's the same pattern we're looking. We'll use the same stock, Biogen. And
Okay.
of course, they're not showing us. The last one they showed us was a Harame or I don't see where there's the bullish kicker here. All
Okay.
right. So we won't worry about them, but just
I can
candlestick.
actually go online and like the ones we discuss, kind of get some examples and just kind of play around, try to understand.
Yep, the very thing that we just did is very simple to do right here with bar chart and candlestick patterns, because they just make it, and they'll show you the examples. And so when I add a video to the blog, I'll probably stick with about 4 or 5 of these main ones that I think people should be familiar with, and at least recognize those pretty simply to help them with their trading. So patterns. So another, can you still see my screen?
Yeah.
Okay, so when I clean this up, I'll get rid of all of these, and I'll leave these definitions here, and I'll probably add a video down in here. So another blog that we'll tidy up is just styles of trading, and we've gone over a number of these things already. Trend following. Let me see here. Let me read it and just make sure they're telling me what I think they should be telling me. To ride a trend until it reverses. Strategy involves using indicators, moving averages, convert in the trend direction. Yeah. The trend is your friend. I put a video in here. I did the NIVF video as well. But 3 tenets, this is from TD Ameritrade. I put 3 tenets of technical analysis, and that is the trend is your friend. They talk about trend trading. They talk about that history repeats itself, and they also talked about that the market is always discounting everything. The market's always calculating everything. They're factoring in a number of things all at the same time. So, you know, history repeats itself. The market discounts everything, even the manipulating. I said, remember, markets can be manipulated by market makers. I wrote that in there. So collective market knowledge. So it's discounting everything. It's always factoring in stuff and trading with the trend. So up here, you know, we're talking about following the trend, and we see trends all over the place. You know what a trend is because you can see what it's doing. Breakout trading, we talked about that a ton, you know, 5% above the resistance level with good volume. Yeah. This, you know, they enter positions in the direction of the breakout, expecting the price to continue moving in that direction. Yeah, breakout trading, you know what that is. Pullback trading, also known as buying the dip, you know what that is. We're pulling back, like the example in NIVF, we're pulling back to the support range. So this is also known as buying the dip in an uptrend or selling the rally in a downtrend, but traders wait for a minor retracement or a pullback against the trend before entering positions in the direction of the overall trend. So you already know what those first 3 are. Mm-hmm. Trend reversal trading. That's when something's losing strength, and there's ways to enter it. You probably can go short. We'll dive into that. Swing trading, you know, we talked about that, capturing the wave. You know, if we think, you know, Tesla's earnings are going to be great next week, and we start to take a position in it now, we try to buy the stock at the right price points. We're trying to capture the swing, literally like a swing to a profit. So the definition, traders aim to capture swings or waves within a trend. They enter positions at the beginning of a swing and exit when the swing ends, typically using technical indicators to time their entry. So we're trying to swing to whatever the setup is, swing to a profit, whatever the event is going to take us, or the trading is taking us, and then eventually, you know, you're getting out of it. Yeah. Range trading, we'll skip counter trend trading for now. Range trading, that's channeling. You know, we talk about that all the time. Trading in a range. It says in sideways or ranging markets, traders buy near the support level, which you already know, and sell near the resistance level, profiting from the price oscillations within the range. This strategy requires patience and the ability to identify key support and resistance levels. You already know that. Channel trading should be pretty much the same thing. I mean, range can be a little bit different. It could be going up. You know, a range could be like, it could be moving up and then back to the uptrend and then moving back up, but still holding the uptrend. channel trading is like, we're like
You're on a
train
channel,
tracks.
but it's yeah.
Like train tracks. Yeah. So channel trading, it's parallel trend lines. They contain the price within that channel. They buy near the low of the channel line, sell near the upper part of the channel line. Trend confirmation trading, starting involves multiple indicators confirm the strength of the trend before entering the trade. Yeah, we do a lot of that too, but you just don't realize we're doing it. We're doing it a lot as we look at indicators and confirming that what we're looking at through the indicators makes sense for us as it relates to the trade. Candlestick pattern trading, we just went over candlesticks. Traders use candlestick patterns to identify potential trend reversals, such as bullish.
Engulfing.
Yes, ma'am. Such as hammers at the bottom, such as dojis, such as. They look for specific patterns, such as engulfing patterns or harami patterns. I think that's how they pronounce it, or harami, to make trading decisions based on the price action. So a lot of this stuff as well. There's a couple of trend reversal things we'll have to get into, but we'll take a dive in here. I'll clean all this up and put a couple of video in here. I've got about 10 minutes. I don't want to keep you on too long. Chart patterns. Okay, so we know what a head and shoulder looks like. So let's see here. Let me pull some other stuff up, see if we can look at some stuff on the charts here. Let's go to Tesla, see if we see some stuff here in Tesla. Okay. Okay. So look at both places. Head and shoulders, it's a head and shoulders. So it typically will look a bit like, kind of, if you step back from it, you can kind of see it. Like this would be the shoulder.
Okay.
Here's the head, and
Yeah.
here's the shoulder. And here is the neckline, right in there. So head and shoulders, shoulder, head, shoulder. And when the shoulder on the right-hand side, Sharonda, is small, the stock's usually going to go down. See the length in here, the width of the shoulder? See the shoulder in here? Look at this one here. It's like a shoulder's broken. You try to do a shoulder, but there's no shoulder. It's so quick and small, it went and it goes down. When on the other side of a head and shoulder that's forming, if this shoulder is small, it's going down. It's just the rule. It just goes down. So head and shoulders, the definition, this pattern typically indicates a reversal of an uptrend. So when the head and shoulder starts to form, if we're in this uptrend and you start to get the head and the shoulder, and usually it comes back here, it's the reversal of this, the uptrend is done.
Oh, okay.
And for one, we know it's done anyway, because when it breaks the uptrend line and we go through it, this is now resistance and we know it's done. So it's just, no, but if it breaks through, then, you quickly get back with the program, because then it shows that it's super strong. Because we came down here and we busted back through here and we kept, oh, you better quickly get back on the trend, get back on the train. So head and shoulders. When the price breaks below the neckline, which is right here, a line connecting the lows of the two shoulders, this shoulder down here. I don't think it's down here. It's this low of this shoulder here. The low of the shoulder, which is right here in the crack of the shoulder, the neckline.
I feel like this one might take me a little time to really kind of grasp.
That's all right. Well, we got nothing but time. I'm not going anywhere. As long as the good Lord has me here, we're going to be training for years. You're going to be making money. We're going to be talking in 5 years. Sharon, what are you doing? You'll be like, that's the best money I ever spent. Still talking to Eugene 3 years later. Says, and we'll just dive into a couple of them. When the price breaks below the neckline, because you see me, shoulders, neckline is here, in the lower part of the shoulders, kind of in this crack here. When it
Okay.
breaks the neckline, it is seen as a bearish signal. So when
Okay.
we're breaking this neckline, we're coming down. It's a bearish sort of scenario, especially also if the right side is shorter. Then you have
Gotcha.
inverse head and shoulders, which is going to be like this. See the
Kind
shoulder?
of upside down.
Yep. Here's the head and here's the shoulder. And
Mm,
here's the old neckline in here. Right in there, in that neck. So
mm.
shoulder, head, shoulder. So,
Wow.
and then, this pattern indicates a reversal of the downtrend. Clearly, we see we were in a downtrend. And then
Yes.
it starts to form this head and shoulders. We went through it. And then we get this almost last call for alcohol in there, where it starts to pull back towards what was resistance, comes support. So when we come back in here at this shoulder in this area, you're like, oh, this is a spot to buy. It says, it is the inverse of a head and shoulders pattern with
Okay.
3 troughs instead of peaks,
Gotcha.
trough, 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 instead of peaks. When the price breaks above the neckline, it is seen as bullish. So as we start to, in this scenario, the neckline is also a little angled, probably like that, because the shoulders over here and the necklines were kind of at a slant, head and shoulders. And so as we break it here, start to break it here, it's seen as bullish. But we came down and kind of gave you that last, I always call it last call for alcohol. Don't ask me why. So we come back down here and then we start to move back up and then we find support and we start to eventually work our way up. So then we've got this uptrend starting to form here. So, reverse head and shoulders, identify them, but the simpler way to do it is we're in a downtrend, we broke it. Do we
Yeah.
break it with good volume? And then when we did, that's a good thing. 5% say it was here.
Mhm.
And if it gives you the quick pullback, you're like, oh, this is a sweet spot right in this general area.
Right, right.
You want to get the sweet spot as close
Mhm.
to the support line as you can, and then pull. Look at that. There's your hanging man right there. Let me make that bigger.
Okay.
See the little thing on the top of it,
Yes.
hanging man. And if this were filled in here, this would be the hammer, right? If this wasn't here, this top part wasn't here, and this was just this, that would be a hammer. This is the hanging man here, right? The rope, the neck, this head, and the body, right?
Mhm.
But if this didn't have this little wick up here, it would be a hammer, which
Okay.
would be bullish. Doji, right? Almost near doji, not perfect, but it's about as perfect as you can get doji. Don't overthink what you're looking at, because clearly we can see what is going on. Draw all kinds of lines that'll take it up and clearly see we're in this uptrend and we hit it and we hit it and then we're going through it and you're like, oh man. And
Okay.
then if it pulled back up, you're like, last call for alcohol, it's time to get out, because this is now resistance and we go down. So,
Mhm.
and what we do, Sharonda, we use candlestick patterns coupled with technical indicators
Mhm.
to help us figure out what is going on technically. And then we couple that with fundamental analysis. We marry the two, a dose of common sense, dose of understanding the market, trying to understand what's going on with Tesla and their industry,
Yeah.
maybe geopolitical stuff, because
Yeah.
that stuff will affect Tesla because they're a global company.
Right.
Um, and
And some alerts.
alerts, good management of where you're buying stuff in case you need to get out and you're busy
Right.
at work, and then 1% or 2% stop loss, and looking at the stock in all time frames, because you can see, if I go back 15 years, I can see what Tesla is doing. I can make that work. 4 years and I go back 15 years, I can see what Tesla is doing. It's still in that downtrend. Still in a downtrend, and I can see we had some support. I see this is almost a giant head and shoulders, just a big giant one, right? And then here, this would be the neckline, and
Yeah.
then this shoulder is smaller, and guess what it did? It went down. This trading, look at the width of this shoulder.
Mm.
And look at this one's a lot tinier. And sure enough, it's going down. It went down. And I see where support probably is. The last time we were down here at this 105 range, we bounced hard. You know, it just, I'm telling you, it won't even take a couple of months to be like, I think I understand what we're doing.
Yeah.
But you'll just need the reps. You'll just need
Yeah.
the reps. But I've got to get you in here doing this. Yeah, Eugene, I see this. I see this downtrend. I see a bit of a, I see the distance that you always talk about, the distance between 292 and whatever this is, roughly 215. Let's call it 295 and 215 for numbers. So 80 minus 215 is 15 is, what is that, 65 drop from the 2 is 135. So you knew this was going to see at least 135 and it came down to 105.
Mm.
The distance here. Don't ask me why it
Yeah.
works that way. It just does. It gives you the next target price down. I see that we have a bit of a reverse head and shoulders here. It's a bit of a shoulder and a head and a shoulder. I see the different places where there are downtrends, all here and here in different spots. And I see where we broke through it, and then we hit our head in the major downtrend. Guess what? Can't get through it. Can't get through it. Hit it 3 more times here. Can't get through it. I know that we're going to probably find support if I extend this line from where it was in a downtrend this week after week, this whole several weeks. We're going back from October 2022 to May 2023, this downtrend it was in. I bet you'd find support right where this downtrend extended to. If I make this bigger, we bounced off that today, this week. And you got to know that. You got to kind of see it. It probably would find some support here and here, and things are improving.
Right.
We went down here, Sharonda. Look at the length of the bar.
Yeah.
But this time we went even lower, but the length of the bar is not going down. Like it's getting stronger. Even though it's getting farther down, this thing is getting stronger. It's telling you people are coming in and they're buying this thing.
They're buying.
The
Okay.
situation is changing. It's a bullish divergence. The price is going down, but they're telling you people are coming in. The moving average convergence and divergence. So it's either converging one day or diverging a different way. That's that indicator. This is a trend following indicator. If this is going down, this is typically going down. But if this is diverging from this, you've got a bullish divergence. So putting it together, I'm telling you, it's no harder than what you do right now. I bet you it's probably harder what you do now than what this is. It's just a different language. And as soon as you figure out the language, you're like, and the moving pieces, you're like, I see what I need to do.
Yeah. Okay.
That's all it is. I promise you.
So it ended at 162. Wait, what did it?
Yeah, it ended at 162 today. But guess where we hit? We're hitting against a downtrend.
Yeah.
So we'll see tomorrow. Can this stock break through this multiple week downtrend? This is back in February.
Wow.
In a downtrend for weeks and weeks in a downtrend. So trading these stocks, it's just not that hard. It's the other stuff that's hard. Eventually you'll find this will be simple. You're like, I get it, Eugene. The other stuff is crazy that we do. But if you can master the other stuff and survive that game, this game will be like,
a little bit easier, right?
it'll be easy.
Instead, these type of stocks, they're more like dinosaurs, kind of like these big companies, and
they're more predictable.
Yeah.
Look at IBM. Let's see. I haven't looked at IBM out how long. Let's see what that looks like. Old dinosaur, IBM. Let's see here. 15 years. This stock was in a downtrend for quite some time. Kind of in here. And then there. And then we were in this. Clearly, we had resistance here. Right? Because You know, we were skirting it here and we were kind of hitting our head, hitting our head, hitting our head, hitting our,
Yeah.
hitting your head, and just going through it, but can't get through it. And
And
finally we
so,
went through it enough and then we retouched it and we were gone.
yeah.
140 to 200 over the course of however many weeks this is. It finally got out of its own way and made $60 on 140, 60 points on 140. That's almost 50% on your money finally. You know, but IBM, you know, is just, you know, it's kind of like Microsoft. Microsoft was in a holding pattern for, gosh, I don't know how long. Look at this thing. If we go back 15 years on Microsoft, you know, we were in an uptrend in its heyday. Seems like its heyday. It's back in 2020 where everything was running.
Mhm.
But then, you know, we had this massive correction down. And then we broke through resistance, right?
Yeah.
We went up.
No,
Right? It's not like rocket science. We went up, we
no.
broke through the uptrend, we're going down. And then we kept hitting our head, we're in this downtrend. And then we finally break through the uptrend
Mhm.
and we bought it again and we just went up. And guess where we're at now? We're right on the uptrend line. Let's make this bigger. Probably skirts out a little bit more like so, getting close in this range. But if we roll over to about right here, guess where we're going? Going down, barring any newsworthy event for Microsoft. It's going to correct and it will pull back. And if we look at it on a 2-year monthly, we can kind of see it a little differently. Monthly, bigger picture. We can clearly see really about right in here, about right in here. You know, got a little bit of more latitude. Might
Yeah.
take a couple of more, but you know, if we have a really bad earnings report, we could come down and retouch support, right?
Mm-hmm.
Yeah. Questions about kind of what we went over? I know you.
No, I think you threw a few curveballs at me today.
Mhm.
Just different ways of looking at the technicals and the patterns and the trends and things of that nature. I feel like I need to just kind of go back and revisit some of the information you've gone over. So I'll do
Mhm.
that over the next few days. Um, just so I understand a little bit more. But I mean, I understand when I'm seeing it, like,
Mhm.
you know,
Mhm.
may not understand what it's called all the time, but
Right. That's okay. So maybe start with, I'll get these, probably tomorrow, I'll get some videos in these next 4 and just take a look at maybe candlestick patterns and just be comfortable with like 3 or 4 of them. I believe
yeah.
you're comfortable with the dojis and the bullish and the bearish engulfings, and I believe now you would be comfortable with the hammer, because where would the hammer be more reliable?
Um,
When it goes down at the bottom of a
like,
downtrend, when it comes off the
yeah,
bottom, and of course I'm answering it for you, and the hammer looks like a hammer. The
yeah,
handyman has that little extra above his head, that
yeah.
rope. And if you know those 4 or 5, and you understand when it's more of a reliable signal, that's about really all the main ones you really need to know.
Okay. It's good to know.
Yeah. So anyway, I'll if you see me text you something, are you trying to spend
Okay.
money anytime soon? Or I know you're
I
probably
mean, I'm open to it. I want to make sure it's the right, obviously. Yeah.
right, right. If you see something that you're interested in, shoot me a text
Okay.
and say, "Hey, Eugene, what do you think about this stock?"
Okay.
And in the meantime, we'll look to, depending what your schedule's like, we'll look to get together Sunday.
Hmm.
And if something happens with IGPK, I don't know how much money you have in it. Let me stop
Hmm.
the share here. Let me stop the recording
You'll
too.
reach